I don't think you can think of many digital trillion-dollar asset classes where the majority of people do nothing with that asset class. It's just buy and hold. Most folks that have digital assets today, even stablecoins, don't do anything with them. They are idle. Most people that have US dollar balances, it's in their bank account. So this idea of like idle capital, like we want to take the friction out of putting all of your capital to work.
Joining me today is Asheesh Birla, the CEO of Evernorth, which is a Ripple-backed digital asset treasury firm that holds roughly 473 million XRP tokens and aims to give traditional equity investors the ability to have XRP exposure through a publicly traded entity that's actively being deployed. Asheesh, welcome on.
Thanks for having me.
Thanks for being here. If our listeners recognize him, he also came on during the Talking Tokens mini-series we did during Consensus. So
on the beach. That was super
on the
fun.
beach.
Yeah.
I know this isn't the beach, but this is nice. This will do for sure.
Similar weather.
Yes, but you did a good job, so now we're giving you a full episode. So I know you are a longtime entrepreneur, blockchain executive with over 25 years of experience in Silicon Valley, including board roles at Ripple, MoneyGram, Bitso, and other fintech startups. And at Ripple, you also helped launch its first enterprise crypto product and scaled the company from a small startup to over 1,000 employees. What was kind of your thesis behind joining Evernorth, and what does it kind of differentiate itself from other digital asset treasury firms out there?
Yeah, well, one, it's been a heck of a journey, being in this space for, over a decade. But what got me excited about this space in early 2013 was that I really believed that the best use case for blockchain was about financial markets, payments, tokenized assets. It's just taken a lot longer for us to get there, but I feel like we're sitting here in New York City and it's happening. Like this future is happening in real time. The numbers are up and through the right in terms of tokenization. And after Ripple, I wanted to continue this journey. I don't wanted to pivot into something else. This is why I joined in the first place. And so, I thought a digital asset treasury, Evernorth, was a good way to continue that journey. I thought it was the right time for capitals to start forming on blockchain. And digital asset treasury is one of the many things I think they're going to do in the future is help bridge traditional capital to on-chain, blockchain capital.
Yeah. Do you think it's moving faster, slower, or like on track as expected?
Well, from the start, I really thought that this place was, back in 2013, I thought maybe 3-4 years.
Yeah, it will be good by 2017.
We'll be good by then.
Yeah.
And I'll say it's taken a lot longer. But I think it's moving in a faster pace now than I had envisioned, back in 2013. And I think a couple of things. Number one, financial institutions are now leaning in, which is very different than it was in 2013. Mm-hmm. I think secondly, like governments are now embracing. Mm-hmm. And that's one thing I got wrong. I didn't think that you needed all the regulation back in 2013 to make this happen. Yeah. But now it's quite evident that that's going to really be a catalyst and accelerant to blockchain adoption.
Yeah, I think even in the meantime too, that's why these digital asset treasuries, or DATs as we like to call them, make sense, because a lot of these firms are not going to go and buy cryptocurrencies, but they could buy through Evernorth to get exposure to XRP, right? That's kind of like the high level thesis here.
Yeah, that's right. So hey, think about all the things that you and I have to do, and we were early adopters, but you have to, go out there, you have to secure your Bitcoin or crypto or XRP, and guess what? Then if you want to do something with it, you have to now trust a smart contract or an online lending protocol. 90% of users are not going to do that. Or you can just buy, a digital asset treasury like Evernorth in the future, and they'll do all that for you. Mm-hmm. So that's where we get to the exciting part is okay, now putting this to work on behalf of the customers and institutions and removing that friction and creating something on chain is really exciting to me.
Yeah. I mean, you've been building this space for over a decade, it sounds like.
Yeah, 13 years, yeah.
Yeah, so yeah, wow, 13 years. As you look at it today, maybe from 13 years ago to today, what do you think people are misunderstanding about where the industry actually is?
Yeah, that's an excellent question. And, hey, I fell into this mistake early on as well. Like a technologist, like a product guy, you think the solution is all in the tech. It's like the technology that has the superior attributes are going to win. I think that's important, but that's like one of the many pillars. So you need really good tech. You actually also need really good commercialization. Like, who's going to take it to all the customers and make it really easy for financial institutions to adopt? And then 3, you need liquidity. Because like I always think of it as like, hey, no one would join Instagram if you're just posting photos for yourself, right? Like you want it to, you want others to comment, you want others to interact, or if you remember the early days of Uber, it took 20 minutes for an Uber to arrive because there wasn't enough liquidity. Well, that aspect is going to play out on tokenized projects on blockchain as well. You need liquidity to make it a good user experience, to make it cheaper and compete with the traditional world. So that's the last aspect. So technology, commercialization, getting it in the hands of the right kinds of customers and integrate it into the financial fabric of the world. And then the last one's liquidity.
Yeah.
You need liquidity around those tokens so you can actually do something useful with them.
So how do you think about getting liquidity for Evernorth?
Yeah, so like that's a great question. So I think we're going to be part of the solution. So we're not a passive digital asset treasury. Like Strategy or others, we actually are excited about putting this XRP to work on chain. And by putting it to work on chain in the emerging lending markets that are coming to XRP, you can create yield for Evernorth, which is great, but also create liquidity on chain. I think also, Ripple does a really, really good job of bringing liquidity to different markets. And with their acquisition of Hidden Row, which is now Ripple Prime, it's one of the best liquidity market makers out there. They know the traditional world and they know the crypto world, and bringing that on chain in the future, I think it's going to be super exciting. So I think one of the few companies and chains that get all 3 would be XRP in conjunction with all the partners, including Ripple and Evernorth.
Yeah. Something I was chatting with you about before we started recording is kind of like the reality of some people are so focused on headlines, pricing, price go up, number go down, whatever it is. And then there are other people that are focused on the tech side, like you just mentioned, and like the way Ripple has Hidden Road, now Ripple Prime, and then like you guys are focusing on like using these assets on chain and putting them to work, I believe is how you put it. Do you think then people are looking at 2 completely different realities right now where they aren't seeing eye to eye? Some people are solely focused on tech, some are solely focused on price, but they should maybe be focused on both because that's kind of like the bundle that makes this ultimately, hopefully, better?
No, absolutely. I mean, I think the problem with blockchain entrepreneurs historically is that they really thought this was all about tech. And being in Silicon Valley long enough, like you realize that like a tech is like a small piece of it, right? Like Apple wasn't the first, personal digital assistant that you could hold in your hand. They were just like the first ones that could commercialize it and get it out to market and distribute it. So I think blockchain companies are starting to realize that distribution, commercialization is important, and you're seeing adoption metrics go up and to the right. And so I think like if more entrepreneurs and companies focused on adoption metrics and making the problems of their customers go away and make this easier, I think you'll see like continued growth. And I see that the companies that are focused on that are doing really well in this environment. And listen, I think that the price isn't something you should be focused on. I think it'll come with time, but it'll come with adoption and those metrics as well. And I think I'm happy to see that growth happen on chain now.
Yeah. I know Evernorth spends a fair amount of time kind of looking under the surface of blockchain activity. And at the end of June, the team published a report on RLUSD and XRP. Kind of give us a high level breakdown of what your team found here for those of us who haven't seen it yet. Oh, I saw it, but listeners.
Yeah, so that's something that we've been working on for a while. And the question was, hey, do stablecoins you replace the need for digital assets or XRP? And I think that the data shows clearly that when you brought more stablecoins onto XRP, that created more economic activity on XRP itself. And one reason for that is global liquidity today, outside of blockchain, if you look at equities, if you look at gold, if you look at FX, which is foreign exchange, it's all based predominantly as US dollar as the base pair. So like if you want to have a good liquidity venue on XRP or on any other chain, you need a robust stablecoin to trade against. So that's paramount. That's how the traditional markets work, and that's how crypto markets work. And the data suggests that since RLUSD has been scaling, you've seen growth in liquidity on XRP as well. And even 12% now of all trades are going through RLUSD. It was 1% several months ago. So you're seeing that happen in real time on chain. So you bring a solid stablecoin on chain, and it creates more liquidity. And why is liquidity important? Because like if you don't have liquidity around these tokens, you're sort of like left waiting for your Uber forever, right?
Yeah.
You want to create a good experience, and creating more liquidity around your token is super important for a good experience on blockchains.
Yeah. Do you think that would have been possible if they used more of a generic stablecoin like USDT or USDC, or it was important to have its own native stablecoin?
Yeah, so I think like USDT is great, and USDC is great, but I think the use cases that XRP is focused on are institutional use cases, and institutions want a well-regulated, robust, stablecoin backed by a big company. So robust, it's been around for a long time. It's one of the fastest growing stablecoins out there. It has the right kind of licensing around the world. So being proactive about getting the right kind of licensing around RLUSD, and then having the backing of Ripple. I think that's important too. That company's not going away. It's got a big balance sheet. Folks want to see that kind of backing as well. Tether, I think, is going to have a different kind of use case, maybe a retail use case for folks around the world that don't have access to a bank and want to trade. USDT is that trading venue. Will institutions use USDT? I doubt it. I think the big institutions want to know who the counterparty is and want the right kind of licensing around that stablecoin.
Yeah. What else did you find in the report that showed more meaningful adoption than just big, like, flashy metrics? I mean, flashy metrics are always nice, right? But maybe like weaving that in.
Yeah, I mean, I just really think that you should think of RLUSD or stablecoins as in the early days of the internet, you needed dial-up. And was dial-up the best experience in the world? Not necessarily. Broadband is far superior. But it got people on the internet. And I think that stablecoins, we're finding that that's equivalent of stablecoins as well, is that they're helping get folks on chain, something that they're familiar with, and something that they can actually start trading and holding. So it's a very early, I would say, like rudimentary use case, but an important pillar for anything else that you would want to do on chain. You sort of got to start with USDC, RLUSD, or any other stablecoin, and then branch out into more sophisticated use cases. So I think it's showing that it's a good first step to generate more economic activity, but it's not the only step.
Yeah. I also want to talk to you a bit about tokenization. We talk about it a lot on this show. It's a very big narrative right now. Everyone wants to be a part of that conversation. For a long time, success on that front was kind of measured by how many assets could be tokenized. Some teams say, let's tokenize everything. Others are like, no, slow down. Let's not do that. Do you think we're kind of reaching a point where tokenization itself is becoming table stakes and it is a requirement for a lot of these teams?
Yeah, I mean, it depends on what kind of use case you're going after. But, I think stablecoins was the first kind of tokenization, and it's proven that it's super interesting. I think we're seeing other assets like gold. The irony around gold taking off on chain, where folks thought that Bitcoin was the alternative to gold, well, it doesn't seem like that's happening. But what is really gaining traction is tokenized gold on blockchains, making it accessible for folks around the world to get gold exposure. Everyone right now, it seems, so excited about being the issuer of stablecoins or the issuer of like these new tokens. What I'm more interested in, and what I think is going to be a bigger business, is doing something with those tokenized assets. How do you price lending against those tokenized assets? How do you enable use cases that you couldn't use before or achieve before? before blockchain. One example of that is if you want to buy a house today, you got to put up US dollars as collateral. But what happens if you have a lot of stock? You can't today put that up as collateral.
You have to take it out, yeah.
You got to sell it, you got to get US dollars, you got to put that down as deposits. Well, in a tokenized world, I can actually post my tokenized stock into a lending protocol and get a US dollar loan back. Could be for a house, but could be for a number of other things, a car loan or whatever I need. And guess what? If like the collateral metrics change, I can real time balance and post more with with AI and a smart contract. That's not possible today. And so that's what I mean is like, hey, step one is issuing these new kinds of assets, but if you can't do anything with them, it's sort of boring. I'm more interested in enabling that next order of use cases, lending against them, posting them as collateral, repo markets coming on chain. That's exciting to me. I think that's where we're excited to head as well at Evernorth.
Yeah. Why do you think the market has been so focused on this issuance side versus the utilization or these use cases of actually enabling it?
Well, I think historically that's where like the money's been made. And so I think folks saw that how many IPOs have there been around blockchain outside of exchanges? I can name a couple, and one of those was Circle. And Circle happened to be like the issuer of USDC, and as a result, they made a lot of money, in terms of like revenue and getting, getting deposits and then getting treasury, getting
circular
treasuries.
Economy.
Yeah, their
pun
own.
intended.
No pun intended. And so folks got super excited about that. But I think that even now you're seeing these lending markets starting to take off, called vaults in the DeFi world, and other participants are starting to make money on that as well. So folks are not seeing that happen in real time just yet. I think the adoption rates are pretty small, but folks are believing the same thing's going to happen with tokenized real world assets and equities. And so they're so excited about being the issuer. But I think, again, what you're going to have is a shift to who wants to actually price these DeFi vaults and help folks do something with those tokenized assets. It's going to be this next wave. And I think you'll just see folks flood into that after like more and more of these assets get tokenized.
Yeah. What kind of characteristics then do you see on the front of like, this is actually creating value, maybe on the front of vaults rather than just simply attracting deposits and capital? Like what actually makes it productive here in the on-chain economy?
Yeah, so I would say like, what is something, the lens I like to look at is like, what is something that it's going to enable that you couldn't do before? And right. The one example I gave earlier, what's the point? Like, and usually it comes down to two things. You and I, like living in the United States, we can get a US dollar bank account pretty easily, right? You can get a Venmo account, you can get an Apple account, you can get or Apple Cash account, you can get a Bank of America account. And so for us, holding stablecoins may not be that interesting. But like 67% of stablecoin US dollar adoption was out of Asia. And that's because it's really hard for them to get access to US dollar bank accounts, and we take that for granted. So what are those other use cases around tokenized assets that you can't do today? Well, I mentioned one of them was, hey, why not post that as collateral for a US dollar loan? That's pretty hard to do today for a lot of Americans, and definitely on the international emerging market side, even harder. So that is like a good measure of, is this really creating value? What is it enabling that you couldn't do before? And in general, I think companies are horrible at optimizing their assets. Average US dollar bank account for retail users around the United States to get less than 1% yield. Treasuries are at what, 4%. So folks are not great at putting their assets to work. You think corporations should be really good at putting their assets to work? I think they're not that much better. And why? Because man, there is so much friction in actually like putting your assets to work. And then, by the way, it takes 2 to 3 days to settle. So you need to like put them to work, but then you need to account for them to like, settle to pay, make payroll. So it's a very complicated, antiquated system. But blockchain modernizes all that. It allows you to program all this logic in to make your assets more efficient. And maybe in the future, you're not gonna even know what's going on in the background. because it's all automated.
It'll be part of the infrastructure, and
It'll be part of the
necessarily
infrastructure.
just a product at that point.
Yeah.
Yeah.
A lot of people have like accounts that take their idle cash and sweep it into like interest-bearing accounts automatically. Opening that up to like optimizing that by the day, and getting the most for your assets that you work so hard to earn and putting them to work.
Yeah.
I was on the board of a large conglomerate, remittance company, and they had rows and rows of people that just managed their treasury around the world, and that wasn't even optimized, right? And so, like, wow, can you think about this world where they can have this done via crypto and vaults, and earning interest until the day they have to pay that remittance out? That's like in managing FX in real time instead of having to worry about like markets closing and working around those windows. I mean, that's like a future world where you can build a lot of optimization and really, really maximize your assets. People are leaving so much on the table. Corporates are leaving so much on the table because of the inefficiencies on global markets.
Yeah. So from this point into the next decade, how has your thinking around stablecoins evolved? Has it shifted significantly, or have you kind of held steady on your vision here?
Yeah, I mean, I think stablecoins are just like the starting point. I think they've proven out that blockchains are going to be extremely useful in giving folks access, but also as like an on-ramp to the rest of what crypto can offer. And now it's up to like but I think it's going to be a small piece of like what's coming. I think like tokenized assets and equities and fixed income moving to the blockchain, it's going to be far bigger. That market's 500 trillion, and that's just thinking about what's available today, not what you can create once you move this all to blockchain. So I mean, I think stablecoins are useful. I think folks are like trying to figure out how to be the next stablecoin issuer, where I actually think they should be focused on what can you do with stablecoins once they're tokenized, and what can you do with other real world tokenized assets once they're tokenized. I think that's going to be a far more exciting opportunity.
Are those the conversations you're having right now with some investors or institutional players and kind of guiding them through here? Or is that not necessarily like in the conversation?
No, it's absolutely in the conversation, and like we're actually trying to develop that world. And so we are working with the XRP developers to build lending products and bring DeFi to the XRP ecosystem.
Yeah.
Why? One, it's going to be exciting and more use cases on XRP, but two, we can put our capital to work as well. And we can start with XRP and get more, get yield for that XRP, which I think will be great. But as more tokenized assets move their way to XRP, the blockchain, how do we put those to work as well? And so making sure we have the right kind of features on XRP, the right kind of lending features on XRP to help us put those to work is an important part of what we're up to.
Yeah. In your research as well, Evernorth's research report around RLUSD and XRP ledger kind of seems to suggest that stablecoins can actually strengthen the broader ecosystem rather than compete with these native assets. Kind of going to the point you brought up before. What do you think is the bigger lesson here that people outside of this ecosystem should be paying attention to as basically like a case study then?
Yeah, it's, there's always this debate online is like, if you have a really good stablecoin, like you don't need any of these blockchains.
You could just exist.
You could just exist somehow in the middle of like nothing,
somewhere,
right?
Yeah.
But folks are not like, looking at, well, what do you need to do with a stablecoin? Well, you need to trade it. Even if you want to do FX or, cross-border, payments, you need to trade it. You need it to make it liquid. When more and more of these assets come online, from equities to gold to commodities, you're going to want to trade those too. But our research is showing that you want to trade that against US dollars. And so folks aren't looking at, all right, well, listen, stablecoins are a starting point, but to win these markets, you need to have a lot of liquidity on chain, and stablecoins are a catalyst for that liquidity because it's the base pair of how all these assets are traded in the traditional world. So you can't have one without the other. I guess I would sum it up as that, is that you need a solid US dollar base pair if you want to provision liquidity on chain. In RLUSD, the metrics suggest that it's achieving just that.
And Ripple is unique in this instance then, because other chains necessarily aren't going this route.
Well, I think like the unique positioning around what XRP is doing is that they're going after like the institutional grade DeFi products, institutional lending, institutional FX. And that just means that you need to have like a more robust set of KYC tools, know your customer tools, and onboarding. But it also, you got to have institutional grade protocols as well. So what does that mean? Like most of the folks do DeFi in the world of smart contracts, but the XRP approach is actually to build those native protocols for lending and other use cases directly into the XRP ledger itself. So it takes away the smart contract risk, has features like know your customer, is institutional grade. So it's not like one or the other, it's just they're going after a different kind of customer base for this future.
Yeah. I've also seen you describe the dollar as basically the on-ramp to the XRP side of, or the dollar as the on-ramp and XRP as the economy. That's what I meant. Can you kind of unpack that framework and why you think that's more of a useful way to understand how these networks evolve and are working today?
Yeah, well, I mean, let's go back to like the the point that we were talking about earlier is like technology is one aspect of it, but what else do you need? You need commercialization, so that means you need people to integrate this into the real world, into financial institutions. I think Ripple does a fabulous job of that, but then you also need, if you would talk about the on-chain economy, you also need a lot of liquidity on-chain as well.
Yeah.
And statistics have shown that you really can't have a vibrant on-chain liquidity market without having US dollars and a solid US dollar pair. And some folks are going to use Tether in some markets. If you want institutional grade, I think RLUSD is that institutional grade US dollar stablecoin. So that's how it sort of, your on-ramp, but it's also your base pair for so many liquidity pairs that you want once more and more assets become tokenized on-chain.
And then I'm going to ask you again, where does Evernorth's mission and thesis fit into this economy and framework then? I'm just going to keep weaving it back in, but
yeah, absolutely.
I think it's helpful.
Yeah, absolutely. So, what we want to do is we're going to start with XRP, but we want to be, building on the XRP ledger itself as well. So that XRP that we have in our treasury, we wanted to put it to work using these new protocols and lending protocols that I was talking about before. We want to help create more liquid markets on the decentralized exchange on XRP itself. And then as new kinds of assets make their way to XRP, new kinds of tokenized assets, we want to help people do useful things with those as well. So facilitating lending markets, facilitating new kinds of use cases that you couldn't do before, but once they're tokenized, they become easier. So we are evangelists of the XRP ecosystem. We're going to help develop new kinds of features that help us take us into this tokenized future, but then we're also going to take our capital and put money where our mouth is. And so, put it to work using these new kinds of protocols as well.
Yeah.
And if you do that, you help, as we talked about earlier, create like a vibrant on-chain economy around XRP.
Yeah. Kind of putting that capital to work. I know something that your team has talked about too in the report is that idle capital is often the biggest signal investors overlook. So why is it such an important lens to have this idle capital basically moving to understand where the markets are headed?
Yeah, so I think that, most folks that have digital assets today, even stablecoins, don't do anything with them. They are idle. Actually, like what I learned is that most people that have US dollar balances don't do anything with them either.
It just sits in their bank account.
It just sits in their bank account. So this idea of like idle capital, I don't think you can think of many digital trillion-dollar asset classes where the majority of people do nothing with that asset class. It's just buy and hold. And that's not what we want to facilitate at Evernorth. We want to actually be the companies that are helping you put that to work in a safe and effective manner. And so, that can be everything from building out these new lending protocols to actually like creating the right kind of real-time risk engine so that we can price the lending markets in real time. We want to take the friction out of putting all your capital to work, starting with digital assets at the beginning, but as more and more assets get tokenized, putting those to work as well. So this idea of idle capital should go away. Like, we should all feel optimized, but it shouldn't feel like a lot of work to you. It shouldn't feel a lot of work to the corporates. It should just happen in the background. And I think like that's how you create like a very vibrant ecosystem that's a good product experience. And I don't think we're that far off.
Yeah.
I think that folks are going to want more and more of this as the markets mature and as it becomes more robust. People are just going to want more and more of this because it makes a lot of sense.
Yeah. Do you think people are opening up to that? Like, maybe not so savvy investors, because I'm thinking of like some people that maybe don't invest as much or aren't familiar with financial products like that. They don't even know that they could earn money on their money, essentially, is like the simplest way to put it, right? But there's got to be some kind of catalyst to open that door, because once you have the floodgates open to maybe the less financially literate people, that's like a really big TAM that has not been tapped into at all.
Yeah, so I mean, access to the rest of the world, and there's all sorts of products that you can create to make lives of people, better. And I think like trust is a big one. And so you have to have and create a trusted brand. And again, everything that we want to do at Evernorth, we first and foremost, we want to create a trusted brand. We want to do things the right way. In the whole de-SPAC process of forming Evernorth, we did things the right way. Created a strong structure and put in the right kind of controls to make sure this was an institutional grade company. So I think it starts with trust, but then I think like the markets have to mature as well. Right now, like a lot of the headlines in the past around DeFi have been around the hacks and about like vulnerabilities. That does not build a lot of trust and confidence. And so I think the approach that we're taking is creating institutional grade lending markets and protocols that are baked into the protocol and not changeable, which makes them, I think more robust from a security standpoint as well. And then the last piece is like, it can't feel like a lot of work. Like today, gotta get a crypto wallet. You got to secure that crypto wallet. Oh my gosh, if I lose my keys, that's going to be a disaster.
Anything over like 2 or 3 steps, you're going to lose every single person that's not in this
just
space.
Click and go.
Yep, one click.
Like it should just say click and optimize, or it should say like this is how much risk and this is when I need my money, and let the background figure it all out.
Yeah.
And that's not, again, far away. Once you have this all on blockchain and you make it programmatic and you have like a real-time pricing engine, like the one that that risk engine that we're building at Evernorth, those are all the ingredients to make this happen. Now it's like, how fast do these assets become tokenized so you can put them to work?
Yeah.
And again, like we started this conversation, it was like 13 years in is where we thought we were going to be. I'm like, no, but I think technology in general, like, takes a lot longer to come to fruition, but then it's a lot shorter to make an impact. The internet started in the 1960s, but from 1996 to like, where we are now, look at the growth. I mean, you go around San Francisco and, using your phone, you can get an autonomous vehicle. I can get an Amazon package same day delivered to my house. So that once it gets going, it's going to be a lot quicker. And I think we're at that inflection point when like, it's not when, it's like, it's happening now.
Yeah.
And I think like with financial markets, it's like a snowball effect as well.
Yeah, it's so funny because with the internet, people just saw it as like a replacement to like mail or not even the radio. Like, it was just mail.
Newspaper.
Yeah, newspaper, email, that type of stuff. And I even know like back then, people didn't even want to put their name on the internet, their financial information, all this stuff.
Maybe that was like the right decision, by the way. But
yeah, I know.
But yeah, it is
now,
funny, and I actually like think there's a lot of parallels there. So I totally remember like the early days of the internet. Folks were like, you can read the newspaper online yet.
Yeah.
But what ended up happening was that, oh wow, it actually opened up access for anyone to be a creator and to create all sorts of interesting video content and uninteresting video content as well.
Of course.
But like even right now, folks are thinking, wow, issuing tokenized Tesla stock, that's so interesting. I'm like, it is, but imagine when you start combining these products on chain together and enabling new kinds of use cases that weren't possible today. Enabling like a farmer to actually go out there and actually sell futures in their crop, so that if there is a drought that crop season, they don't lose their shirt. They've already been hedged. You can't do that today, but you can when these things are all tokenized and you give them access.
Yeah.
Or like the story that I mentioned earlier is like putting your assets to work. So maybe you can go out and buy that house by putting some of your other assets to work instead of having to sell them into US dollars like we're living in 1960s, right? Like why not put all the other assets to your work and get the house that you want?
Yeah.
So like that evolution is what I'm excited for. We're not far off.
Yeah.
But I think that is really when folks are going to start seeing the power of like putting these financial products in the hands of people around the world.
Yeah. I think it also goes back to the trust angle you were talking about before
100%.
too, and is also like the first movers, the people who test things out first, and kind of believing that, okay, I could trust this because everyone else has already used it. If anything, I'm late now. Kind of going to that internet analogy. How do you think about building trust today? And do you find that people are more trusting, or that these exploits keep kind of like pushing us back a little bit every single time they happen across the industry?
Yeah, I mean, like I think that well, I mean, there's two ways to look at the exploits. I mean, like, if you look at the numbers as a percentage of blockchain, capital, like they're smaller and smaller, and secondly, like there's been very few more recently that where the holders have not been made whole. So I think there is trust coming, but I also think that. There's this idea of institutional grade products coming out that are different than retail grade products.
Yeah.
And one thing that you and I started talking about was vaults. And so what vaults are interesting to me is that one thing that's interesting to me about vaults is prior to vaults, if you wanted to get if you want to put your crypto to work, you had to trust some crypto bro to put that to work, right? Mm-hmm. And price it. And so all of a sudden you got 18% APR in their smart contract that created, and they were lending it out to who knows who.
Yeah.
Well, that's not going to work.
High risk.
High risk.
Maybe high reward. Maybe. I don't know.
Sometimes.
Not always, right?
But what's interesting about vaults is that it separates out those two functions. Let the blockchain developer create the vault itself, but the pricing should be meant for asset managers that specialize, guess what, in pricing risk. And so that's one example of maturity that's coming to the blockchain. And guess what? I think you're seeing now that folks are starting to trust that more. And I think you're seeing a combination of institutional players provide that kind of capability, which I think creates even more trust. But then you're also seeing companies that, and we hope to be one of them, that are developing that the right kinds of products and the right kind of reputation to help manage these assets as well.
Yeah.
So it's very different than the wild days of the 18% APR and trusting it to two guys that are based in Slovenia. Okay, so it's a little bit different now.
There's
where
a lot
I think
more
it's
frameworks and compliance.
Yeah, and by the way, regulation is good. If you do make a mistake, you should be held accountable, and I think that's where regulation comes into play as well.
Yeah. Evernorth is not publicly traded yet. Hopefully listing day is coming soon-ish.
We are hoping.
Yeah, of course. But ahead of that, obviously you're probably planning things, but how do you think about measuring success once you guys hit the ground running from that perspective, but also as you're leading up to that, right?
Oh, great question. Yeah, I mean, so there's a couple of things that we're doing. We want to educate the market. I mean, I'm just surprised on how few folks know all the interesting things going on in the ecosystem, the tokenization growth, how stablecoins can be a catalyst to growth on Ledger. So we're doing a lot of educational content out there, doing a lot of research, but we're building product. We want to be ready for that, eventual listing day, and so I think the product that will underpin so much of what we want to do in the future, which is putting your assets to work on chain, on XRP, is building a real-time agentic risk engine. The problem with the way that folks have been managing risk with crypto in the past, as we mentioned, either they're not capable of it because they're developers, or they're using an antiquated model to price risk, meaning in the traditional world, markets close at 4 p.m. or 5 p.m. You get a snapshot window at the end of the day. But guess what? In crypto, everything moves real time. So your risk and pricing engine need to move real time as well. So we're out building that. So when the market when we are closed, we're ready to deploy assets on day one, XRP. But then, like, as more assets become tokenized, that'll be a fast follow. So, as more assets become tokenized, we're there, ready to deploy and help others put their assets to work.
Yeah. Since you started leading Evernorth, has there been anything that has substantially changed your opinion on the future of digital assets and where all of this is going?
I mean, we've always been waiting, like, when's this inflection point going to happen? I remember coming out, we're here in New York City, I remember coming out maybe 10 years ago and meeting with financial institutions, and they were saying, they were looking for reasons to say no. And if you get them to say yes, they would commit to a proof of concept. A pilot, which is like, like that, those words are just
pilots, yeah.
bring up all sorts of PTSD for me. But like now, I was at a breakfast this morning with a fairly large institution, and they've already hired a team of crypto experts. They are ready to go. That is a very different sort of posture than it was 10 years ago, and I was actually quite blown away at how fast they wanted to move. So this is not an experiment for them anymore. They're building teams around it. They're building infrastructure. They're talking about custody of assets, which I welcome. But they want to be part of this future, and they're looking for partners to help them take them into this future. So that's night and day. And I mean, you definitely hear about it through the press and CNBC, but to see the pulse firsthand here in New York City, I think is surprising.
What was your guidance to them? Did you kind of gear them one way or another?
Well,
what did they want to know from you?
I spoke the truth. I said that, listen, like, hey, like the ledger that's been at this for the longest time, working with institutional grade companies, has been XRP, and so I think that makes a lot of sense. But we want to be at the table with them. I don't think that this revolution is going to be without the financial institutions. I think the early crypto guys got that wrong. This is going to be building with the financial institutions and with the regulators. So you need the financial institutions for that capital, that liquidity. That is where like the robust on-chain liquidity is going to come from. You need the regulation, and you need the commercialization. You need all these aspects, and building in conjunction with partners is the only way forward. And I think that's a big learning from the early days where folks thought they could just do this all themselves without any regulation or financial support from institutions.
Yeah. Okay. Last two questions. Looking ahead, maybe what are the trends or types of products that you're watching the most closely that you think will kind of shape this industry over the next 3 to 5 years?
Yeah, so I think that I look at important metrics, not only how much is being tokenized, but what are folks doing with those tokenized assets? Is it just one person holding it, or are they actually putting them to work? I think that's important. I am very excited about where vaults are going to take us. I think that is the right kind of infrastructure to put these assets to work, where you have the developer creating the infrastructure, but then you also have asset managers pricing it effectively. And then lastly, not a product or a trend, but like, what's the global posture around regulation? My hypothesis is that if the US leans in, that you're going to see fast follows from around the world. No one's going to want to be left out. And I think you saw that with the stablecoin bill.
Right.
Genius Act passed, and then Europe started getting on board. And I was just in Korea, and they're like interested in moving forward and so forth. So, global regulation, I think, is a fast follow from whatever the U.S. or Europe does.
Yeah, that's what we've been hearing as well. It's kind of like waiting and seeing what U.S. does, and then we will follow suit in a similar capacity of some sorts.
And by the way, that's like what happened, and we talked about the internet a number of times.
Yeah,
but
with
like,
many markets.
With many markets,
right.
that's like really similar. When I think it was Gore and Bush actually collaborated on the Communication Act that paved way for the internet. Without that, you wouldn't have seen the internet take off in the United States and all these global brands created in the United States. And I don't think others want to lose out on that action when it comes to remaking financial markets.
Yeah, no, 100%. All right, last thing, can you leave us with a piece of advice, something that you've carried with you throughout your time in this space?
Yeah, so I think if you're going to be in blockchain space for this long, I think you got to look at the long term.
Yeah.
And you got to like really ground yourself on why you even joined this. Otherwise, you look at the daily fluctuations and you sort of get discouraged. But look at all the good that's going to happen once you put these financial products in the hands of people around the world. So like dig deep into your mission, and hey, this is the time, like, have conviction. Like the metrics are, up and to the right. This is happening. This is unfolding before us. But if you read the headlines every day, you might get a different story. So make sure you have that long-term viewpoint and stick to your mission, throughout this whole journey.
Amazing. Well, thank you so much for coming on today.
Thanks for having me.
Yeah. Thanks for listening in to this episode. I really enjoyed this conversation with Asheesh, talking about RLUSD, XRP, Ripple, all these different things and what Evernorth is working on. I think it's pretty unique here. I would love to know in the comments whether or not you guys agree, and if the idea of having RLUSD and a native stablecoin on chain is the move forward. Let us know. And thanks again.